All right. Thank you for joining us here. So we're here to talk about building new financial rails. So maybe we can go around and do an intro and maybe a little bit about your company and how exactly you're disrupting the legacy TradFi infrastructure.
Sure, I guess I'll get started. Hi, everyone. My name is Annabelle Huang. I'm a managing partner at Amber Group. So Amber Group was founded 5 years ago, really building the infrastructure and then the trading UI, UX for the institutional and the individual users globally to access crypto liquidity. And now we're also venturing into the digital lifestyle space, providing NFT-related infrastructure as well. So essentially, positioning ourselves as the service provider and also the infrastructure provider for the space. We grew from 6 people 5 years ago to now 1,000 people globally now. We were in Hong Kong before, but moved to Singapore a year ago. Also blessed with a Temasek-led round at $3 billion earlier this year. So we're all settled here in Singapore, and it's great to see everybody here in our home turf.
Great. It's terrific to be here. My name is Entwistle. I'm at Ripple. We've actually been a 10-year-old company. We started a decade ago based on the premise that there was a better way to move value across borders. And we've stayed with that mission from the very beginning as it relates to cross-border payments. We have built RippleNet, which is now existent in some 55 countries. We have a RippleX business, which looks after NFTs and CBDCs and carbon credits and all sorts of new business models. But at the core, we're about crypto liquidity and moving value across borders, providing solutions for enterprises in a way that solves, we think, one of the last great conundrums in finance, which is why people have to pay 7% money to move money from one jurisdiction to the other. We can now do it seamlessly. We can do it with an environmental bent to it. And we're having fun doing it in Singapore. We also are home in Singapore. This is our headquarters for not just APAC, but also our MENA business. It's by far our largest region, so great to be on the home turf as well.
Hi, I'm Cynthia Wu, founding partner and CEO of Matrixport. Matrixport is a crypto custodian, asset manager, as well as prime broker. And we've been in this space for 3.5 years and really position ourselves as an enabler to help people, institutions, and retailers to access TradFi and DeFi opportunities. Nice to be here today.
Hi, I'm Mike Belshe. I am CEO and founder of BitGo. We are also a crypto custodian. We're a wallet technology platform. Been doing this about 10 years now. About 20% of all Bitcoin transactions by volume go through a BitGo wallet, one way or another, integrated with hundreds of exchanges around the world. And then custody side has been growing and building up prime brokerage.
Awesome. And I'm Joe. I'm a partner here at A16Z Crypto. A lot of what I was doing prior to this was in peer-to-peer, call it transactions before crypto. So like focus at like Uber or DoorDash or Cameo, and generally just really interested in how people communicate, organize, and exchange value. And so I think how crypto really helps here, right, is disrupting the TradFi world where a lot of the current networks are kind of accrued to central entities. And ultimately the ethos of Web3 is that these values can accrue back to the end users. I think using the Uber analogy that Brooks and I both know, the network of Uber is powered through drivers and riders, but they aren't necessarily the ones that actually accrue the value. In fact, they don't actually make any of the decision rights or governance rights, and you have this non-participatory class of individuals, which are the Uber shareholders, who actually do govern the network. And so bringing this back to legacy financial rails, I think how crypto disrupts is it's just a more efficient matching of the allocators of capital with those who need capital. And so, yeah, hopefully when you one day integrate the demand curve, you can actually have a maximal accrual of the value back to the actual consumers and producers and minimize that deadweight loss. So cool. Now that we're all acquainted, let's go into maybe a discussion about CeFi versus DeFi, right? So I think generally a lot of individuals for a really long time didn't really care where their yield came from, but recently there have been a few blow-ups. I think Celsius is a good example. I would love to hear if you guys have any thoughts on if that narrative is changing, and maybe Cynthia, you can start here.
Yeah, sure. I think a lot of people has been putting a lot of focus on the recent implosion happening in our industry. I think that highlights a lot of a few challenges or problems that I can see. So one thing is that a lot of this SandFi platform has not really been disclosing so much information to their investors on where exactly their funds are used, like what is the risk they're taking to generate those returns, and how they're managing those risks, and also what the liquidation look like when things go wrong. I think a lot of that is a black box, and it's a problem. I think the recent explosion and the fact that there's no bailout in this industry actually help us to flush out the bad players a lot faster than in some of the TradFi contexts. And I think that's overall healthy for this industry. And also, I think there's a lot for SandFi platform to learn from the DeFi, because in DeFi, a lot of things is executed automatically on chain, right, through smart contract, and the rules and is hard-coded. So I think that's something I think SandFi platform like ours can really reference. And we recently been putting a lot of thought around how we can improve the transparency and the risk management through a more real-time and a full disclosure manner to allow people really see like their asset on our platform, what they're used, how the risk, real-time risk management look like, so that they would have gradually rebuild the confidence in putting the money onto SandFi platforms. And so hopefully after the product revamp, we can build a new and higher standards for SandFi asset management platform.
That's awesome. Brooks, did you have any thoughts?
Absolutely. I think one of the things, and we talk about this all the time as a group, and across this entire ballroom, there's people with very different viewpoints on this spectrum, if you will. And one of the things we firmly believe in is it's not really an argument between the two. There is a movement towards DeFi, but we live in a world where there's so many things in this financial system that are still centralized or traditional in what we're doing. And one of the things I think we've done at our own company is had to kind of play both sides of that, whether or not it's with working with old, original, slow-moving banks that were some of the original investors in our company and on RippleNet initially, and then fast-moving PSPs who are cutting edge and taking this and really adopting some of our crypto solutions, and everything in between. And we were joking backstage, you know, some of us put on a t-shirt today, some put on a suit, some put on a sport coat. It kind of depends on which part of that spectrum you're talking to, because we need all actors across that to be a part of this. So I think it's a motion, it's a migration, but it's not black and white, and we ought to come together for exactly the reason Cynthia mentions. You know, we're all, in some ways, need to regulate ourselves and make sure that there are no bad actors in this community. We're all out proving, we think, world-changing technologies to a much broader base, not just consumers, but governments and everyone in between. And so I think this is all upon us to make sure that people understand both sides of it.
Yeah, sure. I would like to add on to that. So basically, I think SandFi and DeFi would always coexist. I feel a few years ago when the decentralization discussion first starts, we've always been debating like, is it always good to have everything decentralized? And recently when we see the DAO, and we have a lot of discussion and debates about how decentralized the decision-making should be for the DAO, right? Is always more decentralized the better? I think there's no absolute answer to that. It's all relative. Like, it depends on the context, right? What is the scenario? What is the problem you're trying to solve? What is the main target audience? And what's their primary needs? I think it all depends on all that. So in my understanding in the future, right, DeFi, SandFi will coexist, and probably there's going to be a seamless bridge like between SandFi and DeFi, and it will be probably so seamless and integral to a level that you don't even feel you are crossing SandFi to DeFi, DeFi to SandFi. So I think that's how I see this market evolving into, yeah.
For sure. I think ultimately it's this idea of transparency, and when we think about DeFi, it can't be evil because the smart contract is code, it just executes, and you have to have like real trusted advisors to believe that they can't be evil. And so, yeah, I generally think that there is definitely a coexistence for sure. So switching gears, I'd love to chat about the trade-off, about self-sovereignty, so like custodying your own assets relative to custodying it with a centralized entity. There has been a few security breaches, and generally just wanted to hear your guys' thoughts on what are some of the different ways that you can be most cautious about that, and maybe some of the differences in securities between MPC versus multi-sig. Mike, you want to take this one?
Sure. So look, the great thing we now have is the option to decide, are we going to hold it ourselves or are we going to use somebody else? And I think if we lived in a world 20 years in advance from where we are now and everything's digital assets, some things you would use on your own person. And other levels of asset holding and companies you interact with, you want to hire people that help manage your funds, pass it on to your children should you die, and things like this. So there's definitely a role for both the decentralized capability, the non-custodial capability, and the custodial capability. But more importantly, if you're managing someone else's money, you are a fiduciary, you are held to a much higher bar in terms of what you're doing and how you're managing those assets, what your transparency is, what your fail-safes are, what your audits are, what your operating controls are, and how you manage that. So look, we're going to have both of these things. It's very possible. Now, at the technology level, since you mentioned MPC and multi-sig, I think the vast majority of people actually don't care that much about the differences there. Look, as a custodian, as a fiduciary for other people's money, you have one job. Don't lose the money. That's the job, right? So look, there's more to it. You got to keep audits safe. You got to do reporting properly, et cetera. So BitGo does both MPC. Actually, we use threshold signature scheme in addition to multi-sig. We use the right tools that are appropriate, and we make sure that's all held in deep cold storage, because that's the job, keeping it safe.
Awesome. Annabelle?
Yeah, no, I agree. Right, our job is to continue to preserve the wealth and then not lose it. And the way that we pick maybe the custodian providers or even building that in house is also with that in mind. I'm not the custodian or wallet tech expert, but we do also use MPC-related technology for the reason of having security and also flexibility. And I think that's what we want to offer ourselves and also our investors. And I think this question, though, comes down to maybe the education needed and the current UI UX. Right now, we actually speak to a lot of the clients are new to the space. They run maybe their traditional family offices. They're ultra high net worth themselves. But if I tell them to, hey, set up your own wallet, whether a Ledger or a MetaMask, it's still very difficult for them to use. And almost like, why am I bothered with this? So somebody has to come in and provide some easier way as an alternative. And I think that's what Amber's building, what Matrixport and many others are building, to be that middleman. I think that's the value of CeFi. I don't think decentralized finance change how finance works, right? So credit risk exists in CeFi, exists in DeFi. Maybe it's the pool is taking the credit risk as opposed to another counterparty, but it doesn't change that. But I think people still need a sort of a middleman to help abstract away the complexity in terms of when you are interacting either on chain or off chain with other real world assets. And I think maybe this is the key difference. And to your point, what is the difference between CeFi and DeFi and how do we onboard new users? Ultimately, maybe it will be a combination. Everybody will land on a spectrum. But I know for a fact that there are a lot of institutions out there who are perhaps constrained to face a DeFi pool or a DAO. So they still need sort of a prime broker or someone in the middle to provide services for them. And I think it's hard to see this pocket of need going away anytime soon. But I think DeFi is, in terms of product innovation, it's a perfect playing ground for that. So before joining a CeFi platform, I was actually working with one of the very early DEX. I don't know if anybody still remembered. It's one of Consensus Spoke's AirSwap. So I guess I do see both sides of it, and we need both. But I think right now most of the people still prefer a CeFi platform.
For sure, yeah. There's definitely a usability piece there for a lot of users who aren't crypto native yet. So switching gears, I'd love to talk about, when we're talking about the crypto institutional stack, it would be remiss to not think about generally in the world, there's like this shift of like, monoliths becoming modular. I think a really good analogy would be the one that Jeff Bezos used in like 2006. He was trying to pitch a lot of startups to use AWS for cloud storage. And his whole premise was, look, you should just focus on what makes your beer taste best. And yeah, I mean, like this is kind of back in like, the 20th century. Electricity was something that wasn't commoditized yet. So all these beer brewers had to like have their own power generators, but over time, the breweries that won are the ones that then just rented electricity and focused on like the spices and their go-to-market and all that. And we saw that also at Uber, right? It was, back in the early 2010s, it was a very monolithic architecture, mainly because a lot of these B2B SaaS softwares didn't exist yet. But then even 4 or 5 years later, when I joined DoorDash, it was pretty clear that everything that wasn't key to our pricing algorithm or matching algorithm was then basically outsourced. So in the crypto ecosystem right now, there's it's still rather monolithic. So would love to hear your guys' thoughts on any advice to founders that you think about, in the crypto space, this shift of monolithic to modular. Maybe Brooks, you want to start here?
Absolutely. I do think our former employer, Uber, was a great example. There was a dream at one point, we were both there, that you would go to any city and be able to take 5 or 6 different modes of transportation with one press of the app, with one payment, and be in a taxi, a carpool, a bus, go on a flying plane, and then have an autonomous vehicle take you home. And that was great, except those were all very different businesses that were going on one platform. And I think this example of going to DoorDash and specializing is very important because we really feel, and I think that goes kind of to our roots, and I think this is a panel that actually has that in spades, of really realizing that you've got to do one thing right. And for us at Ripple, it is very much to focus on the cross-border payments business, the treasury finance business, liquidity and crypto liquidity. If we can do that right, it gives you the license to kind of do other things along the way and develop other business models. And it's also the case that I think around the industry and around this room and around this awesome conference that's held today and tomorrow, that we should be comfortable that there may be people in our space that are going to do certain things better than we are. And if we all focus on our specialty, this all seems to hold together in much more of a way as an industry because we are so early innings that we all need this to rise together.
Absolutely. Cynthia, any thoughts?
Yeah, I was thinking what is the biggest and simplest product in our industry? I think it's probably stablecoin, right? Yep. It's a great invention. Everyone uses it, and there's so many user scenarios, and it only does one thing. So I think that explains how we can all build, put our strengths really into the thing that we did best and really work together. I think if you look back in human history, our path to modernization and to globalization, a lot of that is associated with division of work and also specialization. I think that tells how important it is to have that to boost efficiency and productivity at scale, right? So I think it's the same for our industry. I remember a few years ago, this is a lot of people, if they need to build an app, they still need to build their own wallets, right? And I think now we don't really see that because everyone just go to one custodian. And the traders in the early days, they don't have prime brokerage. They have to build 20 plus connectivities to all the exchanges. And now they have DeFi, so they also have to build the rails to DeFi. And now we have prime brokers to provide them one-stop access to all those liquidity venues, plus leverages and capital efficiency. So I think, this industry really moves fast, right? So you really don't want to shorten your time to market and put your time on the things to polish your products, your go-to-market strategy, your sales and marketing, rather than building the rails over and over again. Yeah.
Awesome. Yeah. I don't know, Mike, do you have any thoughts on this? You're a software engineer, so.
Yeah, software is invading the financial markets, right? And so things are changing very, very rapidly. And probably more rapidly than any other market, in part because there's been pent-up demand for decades to have change in this space. Now, because the regulators don't quite understand where we're coming from, because traditional finance doesn't quite understand this, there's a whole lot of questions, a lot of people that be brought up to speed. And the net result is we've actually ended up with pretty siloed offerings across the crypto industry today. So we've got these completely verticalized stacks where a single entity is your exchange, is your broker, is the broker for the other party, is the clearinghouse, is the custodian, all of these things wrapped in one. And this creates a new problem, which is that anytime you have single point of control over that much responsibility, it ultimately ends up having failures. Sometimes those are intentional, Bernie Madoff. Sometimes those are unintentional, right? Mt. Gox. But you have to start breaking this apart. And actually, opening up the next wave of like real massive institutional money is going to require that it come. Everybody's watching. A lot of capital has come in. A lot of it is still coming in. Actually, the global macro climate probably helps us bring it in, even though there's a high level of risk with the current market structure that we have. But if we fix the market structures, that you don't have single counterparty dependency on one exchange when you make that deposit with no protection from bankruptcies, if we fix that problem, it's going to fully unlock digital assets.
For sure. Annabelle, did you have any thoughts?
No, I think they explain sort of everybody's role in this industry to be perfectly well, but I think also just on the very, very base layer, or on the layer 1 or layer 2 side of it, that's what we're working on, modular versus monolithic. And there are a lot of teams out there building something like this so that actually our base layer can power so much more. And then obviously there's so much on top that we can do together as an industry.
Yeah, awesome. So let's talk about something a little bit more technical, drilling one layer deeper on the premise of matching and DeFi. Would love to kind of talk about the evolution of like AMMs, or like automatic market makers, shifting potentially more to be like order books. And we recently saw for Uniswap v3, they're moving along the optimization curve. And so, they kind of are acting more like an order book. And maybe the question here is there a world where like AMMs existed because it was kind of a hacky solution when we didn't have the institutional rails in place, and now that it is a more mature market, this is kind of where we're shifting back to order books because it is inherently more efficient? Maybe Annabelle, you want to take this one?
Yeah, I guess I feel like I have a lot to say about this topic.
Yeah.
So I think switch back to maybe, 4 or 5 years ago, the DEX is out there. Most of them are just, the decentralized part is decentralizing the custody part. So it looks exactly like a centralized exchange, just that you need to connect with your wallet. So that's running on an order book system, and it's the one that was the most liquid back then. And there are others that are running sort of RFQ, so that might be Kyber, and also AirSwap back in the days, where we would match users' order with market makers, sort of like FX, OTC, or dark pool type. And that in itself was difficult to bootstrap. First of all, there's not that many market makers back then that can trade on Ethereum or DeFi yet. Therefore, less liquidity, then there's less users. And it's a chicken and egg that was really difficult to solve until Uniswap v1 came along. So AMM, what it solved is that it removed the dependency on any kind of market maker. Right? Anybody can list a pair, can trade. People didn't care the slippage. That was the point. Most of us came from either HFT or trading background. That was news to us. Like, how can users not care about this massive slippage? But they didn't. They just wanted some liquidity to trade. And I think that revolutionized or actually bootstrapped liquidity into the DeFi system. And that was incredible to see. And of course, then when there's enough trading volume and then people start to see either impermanent loss or the slippage they're actually facing, then they are working to improve that. So there's V2 and then V3. Then you're looking, and then now it's looking similar to maybe how traditional finance works. So I think it is a process where we needed some innovative ways to bootstrap liquidity. And then once we grow big enough of a pool, then we can actually tackle the specific problems. But yeah, this is essentially, I feel like, the history of DEX so far.
Sure. Mike, did you have any thoughts?
Yeah, look, I think actually there's an unsolved problem in finance, which is the global regulatory solution. And we have regulators in all of the countries, each taking a slightly different approach to how they regulate. Now, what is that regulation doing? I mean, it's monitoring brokers to make sure that they're not telling you to buy while they're selling, right? So it's this ongoing lifetime of regulatory overhead, and everybody does it differently, and it leads to different markets that you trust at different levels. Smart contracts, DeFi, normalize all this. We actually have an opportunity to get regulation that works across the globe by way of smart contracts that don't need to be monitored on a day-by-day basis. Now, we have problems, getting like the technology right, so we got all the bugs out, we got to get good programming languages that have fewer security holes in them and whatnot. But if you get through that, then you actually finally crack the nut on how do we do global regulatory. Because otherwise, this is a completely unsolved problem by traditional finance. So anyway, I think it's in its early days. There's more to be done. It's not quite ready for institutional. There's a bunch of regulatory compliance, identity things to be solved, but those are coming over the next couple of years, and then we get a global financial system. That's
awesome. Maybe this is kind of like a really good segue into the next question of just what more can crypto do for like our global financial system? Maybe Cynthia, do you want to kick us off there?
Yeah, I think blockchain can really change our lives. That's my fundamental belief, and why we're in this industry, why we're all here like today. But I think there are a few areas I really personally want to care to see improvements, and where I think blockchain can add a lot of value to improve that. One is the 24/7 trading and settlements in the financial industry, which now is not happening, right? But it's already happening in our industry. So as we expand the scope of our industry by having the more real-world assets and financial assets being represented by token or NFT, and bring all that assets onto the blockchain network, I think we can use the infrastructures we have built today, either it's custodians or it's exchanges or it's prime brokers, to really kind of disrupt and improve how trading is done in the financial assets space, asset classes. And the second one, I think, is small amounts cross-border payments. I think a lot of firms are trying to solve that problem. It is a big problem, and it's very expensive and uneconomic now. I think that's very important for the next level of financial inclusion, is really to solve the payments and issue. Yeah, I think that's my input.
Yeah, I pick up where Cynthia left off. We were in Manila last week with a big part of our team, and like every one of the companies in this room, our employees are mission-driven. They care deeply about the business. And one of the things you can see when we're sitting there with a partner of ours, iRemits, who is the largest remittance payout provider in the market, that's not a bank, the impact that is having, the ability to move money from a worker in the Saudi oil fields to the village in the Philippines and do that instantaneously, bring that cost down, not have that money go missing, because chances are there's a COVID-related hospital bill or an education fee that's due. And so this notion of whether or not it's in the remittance form or small business loans or treasury functions, just moving this value around is key. And then going back to Mike's point, I think this regulatory comment is so huge for all of us. I mean, we all work in this industry where the regulatory relationships matter. And it's really incumbent upon us, just as it was in the early days of the ride-hailing business, to explain to regulators what this was all about, what this is going to change, and what it can do for you, the regulator, your country, and your citizens. And so I think all coming together around that and doing it in a way that's simple, that is uniform, and doesn't have us tripping over each other and having jurisdictional arbitrage in there, which does strange things to business models and to these markets we work in. So, we can't spend enough time, and we'll take every regulator meeting that we can get. And thankfully, in this part of the world, the regulators want to talk to us, including here in Singapore, which is great, because that is the way the relationship should be. Two-way, helping each other get towards a goal of a jurisdiction that works.
Yeah, I think if we think about the future being blockchain-based, and I think we all agree, which is why we're all here, right? What's the end goal is having everybody who's using the internet now somehow interacting with the blockchain. And it has to be smooth. Maybe it's better to be sort of senseless. You don't even know that you're interacting with the blockchain. That's what people are building. But in terms of the very infrastructure side, I think payment in its own, the on-off ramp is the most difficult, the biggest hurdle right now for a lot of users to even start interacting with any on-chain assets. So maybe finance itself is difficult to onboard users, but if you look at games or social interactions, we've already successfully onboarded a wave of users, and I think for a lot of us, especially for those of us who are based in Asia, we really do see the potential there. But then there's so much hurdle that need to be cleared before they can seamlessly be integrated. So I think everybody working on the wall infrastructure, the cross-border payment infrastructure, being the gateway is incredibly important. And then after they are within the ecosystem, there's so many more digital assets or assets on chain that can be created, so much value being created, and it can be transferred seamlessly within the blockchain ecosystem. And I think that's eventually maybe what we see that the future of this is.
Look, I guess if I want to add one thing, obviously we got transparency, we get to reduce risk. We talked a little bit about how regulatory can be completely upended. And where does this all go? The most important thing, and everybody in this room is participating, you're all here because you're evangelizing digital assets, changing the way the financial system works. And at the end of the day, there's a human rights issue which we are solving. Yep. We live in a world where money is a part of how we do things. And the human right to be able to earn money, store that money, have that money preserve its value, and then use that for whatever it is, your housing, your food, your kids' education, et cetera. This is fundamental. And we're finally getting to solve it. Now look around the world, what's happening today with the US dollar. The Fed cranking up rates is having a massive impact on currencies all over the planet. We're seeing people that are seeing their local currency go down massively, and that's affecting their ability to live. And what are they clamoring for? Well, it's difficult to get something stable when your government is requiring you to deal with their currency only. They're clamoring for USDT. They're clamoring for anything that gives them a digital capability to get to something that's more stable. So there's a change that is underway, and it's going to be both financial and then eventually political and monetary. But it's really going to change who's got access to money. It's going to make it so they're all on a much better playing field. So anyway, if you want to talk about change, I think that's the biggest ultimate thing that we get out of this.
I love that, yeah. Well, I think we have to wrap this up, so maybe we can do like a last round robin on things that you would love to see built, especially in the context of emerging markets or Southeast Asia, and any predictions for the future. Maybe we'll go this way.
All right. Well, let's see. I guess I just predicted one. Look, there's a lot of road to hoe between here and there. I actually like the idea of breaking down, what is the global regulatory approach to money and digital assets and everything that we do. It's too much siloed across the different regions. You see, like, I guess 4 companies here with 3 different headquarters under different jurisdictions, et cetera. Each of us with different jurisdictions in multiple regions. We got regulators that are conflicting with each other. I guess if there's anything good that can come out of it, is starting to address privacy. I think is missing a little bit from what we're trying to do. So maybe in the next couple of years we can augment everything we're doing with enabling privacy on top of it. Anyway, I don't know. There's a lot coming.
Yeah. Okay. That's a big question. I think we, as an industry, we have a mission to work with regulators to figure out what is the right way to regulate our industry. Especially when a lot of things that's happening today, the innovation we're making today is unseen before, right? How to regulate DeFi? How do you balance the supervision and investor protection with the need of innovation? And how do you balance centralized and decentralization? So I think that's one thing. It's an evolving and very important subject in our industry. So I would like to hopefully contribute to that, as one of the participants in the ecosystem, and really, hopefully in the next few years, we can have a more clear and healthy regulation. I think that's one. The second one is that we all care about the potential of our industry, and our potential of the industry to some extent is represented by the market cap, right? Now we have less than 2 trillion, which is mainly contributed by the crypto native assets, Bitcoin, Ethereum, Solana, and things like that. So I'm really bullish about NFT and the way how it could bring the real world asset onto this ecosystem. So the market cap probably could tenfold in the next few years or more.
Hopefully more.
Great. I think we've on a couple of big points, which I would just want to reiterate around transparency, but also trust. Because anytime you build a network or a marketplace, that ability for people to want to participate in that is predicated on trust of that system to hand over that paycheck or whatever it is, or to trust that, that flow for payroll, whatever the case is in our industry in payments. And so anything we can do and focus on around the trust element and doing everything right. And we're in an environment where with conflicts around the world and jurisdictions and regimes that are off limits, we all need to play on the right side of that every time and create an environment we do. And I would put in one last point, which is this is the third kind of business that I've had the opportunity and privilege of building out of Singapore. And this is a great place to hire people, to bring people in, and to build and to do things much bigger than Southeast Asia, much bigger than APAC. This is a global center, and I think one of the things that I think we like to call out is this is an opportunity for Singapore around fintech and crypto to take a global handle and be global headquarters, as some of these entities are. So I'm excited about where this is going if we all hang together.
Yeah, and then again, want to reiterate all the points that was brought up. I think ultimately, I realized that a lot of our role is actually here to educate. So this is something that we've committed ourselves to. Educate our clients. So back in the day, it was telling what is Bitcoin, what is Ethereum, and now maybe it's explaining what is a CryptoPunk or Bored Apes. But they are demand, and they want to buy, they want to be a part of this community one way or the other. But one thing we're certain is that there's always going to be so many changes, so many innovations that come out. So on one part is maybe us working with the regulators, making sure that they will be able to see it a way to let innovation still take its place, and that there are more newer assets that are made available. And on the other hand, then we have to work with the end users to educate and continue to provide relevant information, market information, and that in itself is already a challenge because everything changes so fast, and not even just in crypto. I think in macro land, none of us would have expected UK to become an emerging market type economy, right? And so I think if crypto taught us anything, said, yeah, everything changes.
For sure. Yeah, I think if you look in the 90s, very few Fortune 500 companies were technology companies, and you look now, the most valuable companies are all tech companies, and I think the same will be true for crypto. Because ultimately, when you think about what is useful about a blockchain is the composability nature of it, and the fact that the data is completely transparent so that anyone can build on top of it, and that there is no central point of failure. And I really like this book. It's by Ori Brofman. It's called The Starfish and the Spider. And it's a book about, it's about leaderless organizations in a military context, but I think it's very apt for crypto because ultimately our traditional financial systems, I think, is like a spider. And I think DeFi and crypto in general is more of like a starfish, right? So how does that analogy play out? It's like with a spider, you have this big head and you have all these limbs, and generally you think about centralized banks would be the head. You cut the head off, all of the depositors, being the limbs, are the ones who actually lose out based on bad decisions or mismanagement from this one entity. Whereas with the starfish, there is no head, it's just a bunch of limbs. And if you break off a big part of the limb, the starfish is intact, number one. Number two, the limb can actually become a new starfish, which is really, really fun and generative. And then in DeFi, if you think about it in terms of a single participant actually being very risky with how they think about their allocation, on MakerDAO, if they actually really lever up and they explode, everyone else is actually okay. And this is really important because ultimately it's actually really hard to differentiate a spider from a starfish sometimes. And I think Celsius is a really good example of this, actually. And so I think the takeaways here is twofold, right? Centralized entities sometimes, when attacked, become even more centralized, and they actually try and take control in a more, I guess, aggressive nature. And then decentralized entities, when attacked, actually become more open and decentralized. And number two, this idea of giving access to so many people can be scary, but many times people actually rise to the occasion and contribute. And a really good example of that, I think, is just Wikipedia being kind of a decentralized canon of information is just as accurate, if not more comprehensive, than the centralized version of that, which is Encyclopedia Britannica. And so like at the end of the day, I think composability sits at the center of what makes crypto really exciting and why we're really excited about it at A16Z, right? It's this idea of being able to like so many questions, right? Like what is the right architecture for data storage? Who are the people who should compute and store? I think zero knowledge proofs are like super fascinating. And so as we're kind of wrapping up here, I know it's in the midst of crypto winter, but ultimately I think hopefully we're all taking a very long-term view about crypto as a very disruptive force. And yeah, I think now is as good as a time to build as any. So thank you so much for joining us, and maybe we can do a round of applause for all of our panelists here.